We've got Bloomberg stock senator Michael Regan, Brian Blair, analyst with Rosenblatt Securities, and from the pits, Jim Ramelli. Jim, I'm going to start with you. What are you seeing there in Chicago? I mean, are people getting nervous? Do they think that this is a momentum that's going to last here to the downside?
Right. You know, I don't think that this momentum is going to last to the downside. We're definitely looking at a massive sell-off here. What's going to be the worst day of the year for stocks. Keep in mind that this morning we had jobless claims come in at the best level we've seen in several years here. So the economy might not actually be that bad. I think momentum in those tech stocks is really what's driving the sell-off today. If this was a panic sell-off, we'd see a much bigger move higher in the VIX and in gold. And right now we're seeing very muted reactions in both those indices.
You know, we have been watching this move out of momentum plays. Brian Blair here with us. What is behind this? I mean, are investors saying to themselves they do not think the economy and therefore earnings are going to be able to support the valuations we've seen?
I think that's part of it. You know, if you look back at 2013, we did have a 36% increase in the NASDAQ. So a lot of these tech stocks saw, tremendous runs. A lot of the big cap names were up 50 to 100%. So I do think as we end the first quarter and we head into earnings here, I do think there is some concern about growth rates and about the back half of the year. So I think there is some uncertainty there. But I think that investors just want to wait and see what company management teams are saying about what the back half of the year looks like. There's across the tech sector, there are some areas of softness. PCs are still weak. There's been some slowdown in high-end smartphones. So there are areas that are question marks, and I think investors are just waiting to see collectively what tech companies' management teams are saying about the outlook.
So does it last here? I mean, this nervousness?
What's amazing to me is it's very alarming when you have a sell-off like this without a single news catalyst. There's people pointing at all sorts of things today. You had sort of disappointing Chinese trade data. I looked at Zero Hedge earlier. There's about 3 different stories on Ukraine and Russia on there, but really no one is pointing to any single sort of news event. And it's really just, as Brian was saying, a continuation of this rotation we've seen for a few months
But maybe
now.
that's a good thing, right? I mean, it's not like there's an actual event you can hang your hat on.
That's right. It's healthy. It's healthy, but we've had 4 quarters at least of solid growth for a lot of these tech names. I mean, if I look at my own coverage, if I look at names like, not just 3D printing names like Stratasys and 3D Systems, but if you look at names like Yelp was up 300% last year. A lot of these 3D printing companies were up 100% last year. So it makes sense to give a little bit of a pullback, and a 3% decline is not substantial when you look at the overall performance of most of these tech equities.
You also
over
look
the
at
last
the
year.
overall performance of the NASDAQ. Jim Ramelli, I mean, we're, 20% off the highs that we set back in 2000. So we had obviously seen quite a run up 30% plus just last year. Were those kinds of returns unrealistic?
I don't know if they were unrealistic. These names trade at high valuations, but if we look at the broader market, everything's trading at a high valuation right now. We're off of the highs here, but we're still relatively close to all-time highs. I think if this was really a panic mode here, if we were going to go into a bear market, we would see a much bigger reaction in the VIX today. I mean, we're down 40 handles, but we were up 20 handles yesterday through relatively thin volume. It's easy to take those traders out in any kind of momentum to the downside here. So today's move might be a little bit exaggerated because of that. Like they said there was no news catalyst today that could have sparked this.
And I think it's a great point. One of the things that we talked about to our Rosenblatt Securities customers today was to get a shopping basket out and take a look at the companies that are really best positioned to benefit from the back half of the year. We're going to see a significant product cycle across smartphones, in wearable products. There's a number of areas that are doing well in China, and we're trying to get investors to line up a basket and look at really important names that are doing well, like Qualcomm, like Broadcom, names like InvenSense, names like Yelp that have pulled back 25–30%, solid business models intact, and have a great opportunity as you look ahead 3 or 4 months. And so that we think that we could still see a bit of a correction.
See a little bit of a buying opportunity.
That's right. This is a buying opportunity for the best positioned names.